Jim Cramer is back on the floor of the New York Stock Exchange to talk markets. All right, Jim, give us your take on what's going on right now.
Well, look, I think that we were talking with Carl and David about the idea of tradable bottoms. And what I've decided with our president is that 2018 is a different year. 2017, he got you tax breaks, the consumer and, of course, the corporations. 2018 is a year where you're willing to sacrifice certain businesses in order to be able to take a longer-term view. And I think that the businesses that are being impacted by the Chinese tariff, I think that my friend Larry Kudlow might say, like, don't worry about it, but I think our experience is that not only is China on the griddle, but NAFTA is on the griddle. So I want to encourage people to recognize that it's still a buy the dip and buy domestic now that can't be affected, and sell international. We did a huge number, and I'll mention this on our Action Alerts portion of our show here. But let's just say that don't trust the market. It's just not trustworthy because our president is determined to try to break the Chinese, break the Mexicans. You don't put the military on the border of Mexico unless you realize that NAFTA could go up in smoke. So I think that you have NAFTA. You have a hot economy that might produce a number that could take us to 3% on Friday. You have very real Chinese sanctions that I think the president's trying to minimize. If you go after soy, the farmers can be protected, but the Republicans don't want to spend any more money on subsidies. So I think that you can have a rally. And in any rally, you have to take a look at your portfolio and reposition because this is a different kind of market from 2017. An entirely different kind, much more like 2016 before the election. And there are companies that are winners and companies that are losers. There have been no losers before. There is no more forgiveness. So just be aware that it's a much tougher, much more controversial tape. Doesn't mean you shouldn't stay the course. Does mean that you have to recognize that the president is no longer on the side of capital. The moves that he's making is very much on the side of labor. And a lot of people might say, well, wait, isn't he a Republican? I think he's a rogue Republican. I don't think that he has ever really expressed views that are traditional with Republicans on tariffs, which are very much against tariffs. So be aware that this is the new issue, and NAFTA is an issue. China strike back is an issue, and this is something I said. A lot of people laughed at me when they put in $3 billion. I said, oh my God, just forget it. This is, as soon as we escalate, they've got their target list. The only thing that they didn't target is Apple. So look for Apple to be targeted if we don't give a little bit. And I find that this is something that could be very disturbing to people, which is why I am saying a big rally is a chance to sell and reposition, not a chance to buy.
And you told me last week, right here before this recent bout of volatility, that investors need to know what they own, which is good advice.
Yeah, well, I mean, I find that a lot of technology, people don't really know what they own. And I think that that's really significant. Do you understand the difference between Broadcom and Nvidia? Do you understand the difference between Intel and Micron? If you don't, then I think you're going to get hurt because they are very different. Also understand that domestic retail is certainly going to get a boost, but you also have to understand that if rates go up, people are going to sell some of the domestic retail, not all. You got to be careful with grocery because anybody that has grocery, it's very cutthroat. So there's more controversy than I've ever seen on sectors that typically have very little controversy. The food business, the cosmetic business, Estee Lauder taking the big share from everybody. The department store business is really good and really bad. So it's very, very important to realize, do you know and what are you levered to? If you're levered to international trade, be very, very careful. If you're levered to something that can be involved in interest rates, be very careful. Feel better if you read the Lennar conference call. I think that's worth doing. And look at the monthly numbers for autos. Those are helpful. But understand also the JP Morgan Jamie Dimon letter, which I read this morning. But understand that everything's up in the air because of the president's tweeting. And I think that we're not used to it. I think it's erratic. And I also think it's somewhat unbecoming for the White House. But the president's the president. And you have to start every morning with his tweets. Because if he goes tough on China, then I think you can suspect that even Apple will be on the hit list.
All right, we're going to talk about Apple in our Action Alerts Plus call. But meanwhile, Jim, you mentioned Micron, the UBS evidence lab sounding the alarm on
Well,
Micron.
look, I mean, if you look at the way Micron's traded after the quarter, it's pretty clear that people felt that that was peak. Now, before I completely side with the UBS evidence lab, if you look at Micron's chart, after every quarter, there's a belief that there's been peaking. The one difference is that Flash has peaked. DRAM, no, but Flash has peaked. And you need both Flash and DRAM to continue to go higher if you expect that Micron's estimates will go higher. Remember, Micron right now, people are using about 11 for next year. But if prices crash, which I don't think they're going to because of demand, you could see 7. And at 7, the stock is not nearly as cheap as it looks. So 11 versus 7 is what's at stake.
And you had a good real money column last week talking about the hot money in Micron.
Yeah, I mean, look, when you look at the tape, there's no hot money, for instance, in the drug stocks. There's very little hot money in domestic retail. But there's a huge amount of hot money in the semis, whether it be in the SMH, whether it be in Micron, whether it be in Intel, which I like, whether it be in Broadcom, whether it be in Nvidia. And I interviewed Jensen Huang last week, and he's the CEO of Nvidia, and I was shocked that what he said meant nothing because the hot money's there.
Well, and he really kind of confirmed what you've been saying for quite some time, which is that crypto is not such a big business for them.
It doesn't matter. People are presuming that Ethereum is 10% of their business. I think that's been refuted repeatedly by Jensen. It's a little more for AMD than it is for cryptocurrency. Is a little more for AMD than it is Nvidia, but you can't refute your shadow boxing against the truth. It's kind of like Amazon the present. And so every time someone comes out and says Ethereum's 10%, that means numbers have to come down in Nvidia, and then you look at the price earnings ratio of Nvidia and you take, and you reduce your expectations. And it didn't matter that Jensen said that Ethereum and cryptocurrency are going to be with them for a long time. When the Chinese came out with a chip that is cheaper to data mine, that caused people to panic again on Nvidia. And it's like, look, Activision Blizzard, we sold it on the way down. I used to like to sell things on the way up because there's a lot of competition coming into that market. I think that that's one I'd be very, very careful on. But where there's competition from China, they've been very good on price. So you have to be very careful where China's competing. This, again, is an example of why the president's, I think, right about China, which is that they sell things ridiculously low in order to undercut our companies, which is why I think you got to be very careful if you think that the president's going to back down one bit because of soy, because of airlines, aircraft. That's not going to happen. And people who think that these are idle or that there's going to be a coming together don't understand what's at stake here. So be very careful. Trade is something that is unresolved. So look at your portfolio, see how much could be hurt by trade, and act accordingly.
All right, Jim, who do you have coming up on Mad Money tonight? Ollie's
Bargain Store is a stock that I've championed since 20. Long knives are out. Bank of America says that there's been a slowdown in the comp numbers. Pennsylvania Realty Trust, why do I have them on? Well, they represent a mall-based company that had shortfall on expectations that is trying to reconfigure what it does with Sears and JCPenney and what it does with bankrupt tenants. Simon Properties has been the strongest in that group of the malls. Now remember, shopping center is Federal Realty, and they're doing quite well, but it doesn't matter. Again, broad brush painted on the real estate investment trust when rates go up, and certainly a belief that if Pennsylvania Realty loses a Sears, it's just bad. I think that if you listen tonight, you'll hear otherwise, but it doesn't matter. Again, we have a tremendous amount of of shoot first, ask questions later people now, hot money in the REITs has been a real negative.
All right, that's tonight, 6 p.m. Eastern on Mad Money. Meanwhile, Jim, before we go, 1 week from now, you're going to be hosting your April monthly Action Alerts Plus conference call. I'm sure you're already preparing.
Yes, we're talking about a repositioning. It'll be very important for people to listen. I know that this is a recent call versus when we just did our call, but I want that because there's a lot of things that have occurred, and I think that you should join if you haven't. The club is doing a lot of things here, doing a lot of new things. The club, I think, is a bargain. My charitable trust is a little different from the club now because of the limitations of what we can do. But I do think it's very important that people sign up and become club members or try it because it's a nice straddle between what used to be what Wall Street Research was and your mutual fund or hedge fund, which don't tell you what they're doing. We tell you why we're doing it in real time. Of course, you get to buy ahead of us or sell ahead of us because my goal is not to do as well as you. I want you to do better. But the calls have been well received, and we've had thousands of people on them. And so I'm urging you to join. And I typically have not done that in the 15 years that I've been doing this. But this is a club, and I want you to be a club member and get the benefits. So I look forward to you being on the call next Thursday.
All right, everyone go to actionalertsplus.com to join the club. Jim, thanks so much.
Thank you.